Good evening and welcome to the Rick McCormick Show. We're glad you're with us here on this lovely evening here from our South Oklahoma City offices. I am Rick McCormick, and we're coming to you from our offices here with the Rick McCormick Realty Group in Oklahoma City. We're past Labor Day, and this marks the start of our sixth season on Artist First Radio Network with the Rick McCormick Show. Unbelievable. I want to thank our Scott, our producer, who's been with us that entire time, and is one of the people who provided the opportunity to be here and have a show and have the Rick McCormick Show. And I appreciate them and the people at Artist First Radio Network, and also appreciate you, our listeners out there. We launched the week after Labor Day. We got past Labor Day in our first show, so now this is our first show. We have done 5 complete seasons, and I guess this is the kickoff and show number 1 of season number 6 of the Rick McCormick Show. And what fun we've had, what great relationships we've had, what great guests we've had on here, the opportunity to share with you about the real estate market in Oklahoma City, in Oklahoma, and in the nation, and talk about changing laws and evolving trends and what's going on nationally in the real estate industry. We'll talk about the Federal Reserve meetings, which will be one of those 2 weeks when we're on, again, on the 17th, 2 weeks from tonight. Our Federal Reserve always comes out with they fly in, I believe, on Tuesday, meet Tuesday night, meet Wednesday, have a press conference on Wednesday. We anticipate a drop in rates, and I hope it's significant. I hope it's 50 basis points, not 25, but I think we're going to have one for the first one in a while the next time, but we'll talk about that later. We are glad you are with us. Again, evening here in Oklahoma City, and bright and sunny. Hope it's equally as nice where you are at. Great time of the year. High schools, colleges, universities around the country are firing up. High school football, college football, the NFL. If you're a huge football person, you need to send a note out to everybody and say, hey, I'm a little tied up. I'll get back with you in February. There is going to be no more, or maybe some Thursday nights in there eventually, but there won't be any Saturdays and Sundays without some level of football between now and February. If you're a football person, good time of the year. If you're looking to buy a home, real estate shifts into a different gear after Labor Day. Things settle down. Summer's over. If people are moving nationally and relocating on a regional or national basis, a lot of that happens in the summer between Memorial Day and Labor Day. But many times if people are moving locally, they let the summer get over and things settle down, and they lock in local moves within a few miles of the Oklahoma City Metroplex here. If you're moving from one community to another, one house to another, a lot of that kicks into gear after Labor Day. Lake season's winding down, the kids are in school, summer's over. Always a good time of the year in real estate. Again, I'm glad you're with us, and I'm the host, Rick McCormick, of the Rick McCormick Show. Would love to, our text line is 405-310-7470. We'd love to hear from you on a text. We've got several resources that we'd love to share with you. I've written some books, one on buying a home, one on selling your home, selling secrets you can't afford to miss. Let us hear from you, and I'll send you a free digital copy of any of our books, and then I've got your guide to purchasing a new home, specifically for buyers that I've written and put together. And again, same thing. Let me hear from you. Give me a good number, and I can send it to you over text that you can get on your phone or your iPad and a digital Kindle copy and read either of those books, and I can send those to you at no cost. So do that. If you have any questions or thoughts, reach out to us. And the Rick McCormick Show is now available. I was listening to one earlier today. It's available on Apple Music, on Amazon Music. It's available on Spotify and on our YouTube channel, as well as on an archive version here at Artist First Radio Network. So if you're listening live tonight, that's where you're listening from, is our Artist First line. So glad you're with us, and I'm going to go through our market updates. But before I do so, it looks like as I across in the studio, we are joined by our insurance and investment expert, Mr. Brad Martin, the owner at Premier Insurance, and investor Brad. Man, I'm glad to have you with us. I know you've just been attending a big investors event down in Dallas. So again, great to have you along.
Yeah, great to be here, Coach. Yeah, I'm standing outside AT&T Stadium. I'm not there. I'm at a hotel not too far from there where at least I can see the stadium. I'm here with other investors to share ideas, learn what's going on in the marketplace, how they're making money, what they're seeing, best practices, all the above. So I'm glad I could be with you in the audience tonight, man. It's great thing to be here.
Now, tell me a little bit about the expert there that's hosting that. I know you're in a group there of people that pay quite a bit of money to, and of course I'm tied in with the Grant Cardone group, and it's never bad to be somewhere and fly to be in the room with successful people, and I guess I could say other millionaires and billionaires, and that would be excluding me in that group. But it is good to sit down and hear ideas and network with other people and be in the room with those people. So who's the person behind this, Brad?
Yeah, a guy by the name of Kent Clothier, Clothier. Kent made his first $100 million by about the age of 25, where he found a way to arbitrage. His parents owned a grocery store. He figured out a way to arbitrage groceries that people were buying and then mark those up and sell them to other people for a higher amount. He took that same methodology and then went to the real estate world. So for all of us in the real estate world, if you want to go buy a fix and flip house or some house that you might want, he found a way to go find that house from the seller, then go sell it to a buyer, and he was the middleman that brokered that deal and made another $100 million on that, and then ended up starting a mastermind where he brought like-minded people together that just wanted to share ideas, wanted to learn how to scale, how to grow businesses quickly, efficiently, effectively. We have everybody here from real estate agents to people that are building four-season property hotels in Tuscany, and people that are doing fix and flips, apartment syndications, short-term rental syndications like myself. I mean, you name the real estate class, there's someone here that is probably doing it. So the whole thought process is get in the right room so you can pick people's brains. You can learn how to compress time and make money faster. That is the whole key, is how do I compress time, make money faster? And then how do I get the lessons without the scars? A lot of us have some scars that we have from doing deals that might have gone south, some things we would have done differently if we could. So it's how do we get the lesson but not get the scar from doing it the wrong way?
Well, awesome. And that's down in so you're coming to this remote and from the studio there, and you're down in Dallas, Fort Worth Metroplex in Arlington, I guess. I have Lowe's Hotel. Is that what you told me?
Yeah, the Lowe's Hotel today, they have 4 of these events throughout the year. They're always spread out. I'm fortunate enough that this one happens to be in Dallas. So from Oklahoma, it's a very quick drive south on 35, but they've had them in Charlotte was the one before. I'll go to San Diego towards the end of the year, and then I'll be in Cabo in between that for a special VIP event.
Well, awesome. That's great stuff. And I know, like I said, I'll be back down with the 10X group, and of course Cardone is also the sales, teaching, training, and all that, but a lot of business techniques. And but while it's a bit different, but you're still in the room in many of those cases with some really sharp and successful people that to share ideas with. You could certainly take some things away from that, and which is the way we came on the air. I was saying, I think before you joined us, Brad, I started this on the week following Labor Day. So the day kicks off what is the 6th season of the show, of our show, the Rick McCormick Show. And it's really amazing. And of course, you've been with us from time to time and quite often on the air with us as during most of those 5, we've completed 5 full seasons and started a 6th season. So pretty incredible.
Absolutely.
All right. Yeah, I'm going to run through some of the local market here with you and get your thoughts and ideas. I mean, our inventory continues to explode. It's actually down. We hit 86 high, almost 8,700. And right now our inventory is kind of 30% above what used to be normal. We sit here tonight at 8,528. We're 8,500 plus. Our normal prior to COVID used to be about 6,000, so we're still very strong. But we're showing a little more balance. In the last 7 days, there have been 685 new properties come up on the market, and there's been 626 that were closed and sold. So almost an even balance there. We did have 166 come back on the market, so we had 685 new on the market and 166 back on the market, but 626 sold, 560 pending. And we had a couple of days ago, I had one of those pendings. We've got a buyer, Ryan and Melissa Blundell out of Marlow, that are moving up here to Oklahoma City. Great young couple. We've really enjoyed working with them. They're going to have a new home in Navarro here in southwest Oklahoma City in the 73170 zip. So we're working that deal and putting that together, have some inspections coming up. So one of those, but 560 pending deals last 7 days. Last week, 626 sold. Now, the other interesting thing that wasn't happening during that craziness that we had during 20 and 21, we had, of course, the first of the month, we had 314 expired listings in the last 7 days and 63 more that were withdrawn from the market. So we're knocking on 400 that were removed from the market. So we'll talk about that in a bit when we talk about our realtor fundamentals and tips, but it's more important than ever, man, to get a seasoned veteran agent with tools and ability to market and advertise if you don't want to become one of those almost 400 that has expired. And those listing agreements are typically, Brad, for about 6 months. Things are, not all of them, but typically they are. So things are staying on the market 6 months and are expiring. And so we're definitely in a buyer's market right now. And of course, we got the Federal Reserve. We'll have Kendall Dexter on in a bit and talk about interest rates and so on. We think those are coming down 2 weeks from today on September 17th. But right now, the thing you're doing, the different investors and different people that are working real estate deals from different angles, how does this whole market influence what you and your people are doing there at the events you're at?
I mean, obviously, everybody is following it very, very closely. From a seller standpoint, you're trying to figure out, how do I find a qualified realtor to help me move this product ASAP? Because you know that it might be something that you're going to sit on, and the longer you sit on it, the less you can use that capital to go deploy elsewhere. And then from a buyer's perspective, there's deals out there to be had. So a lot of people are talking about, how are they making offers? What type of deal structure are they putting together? What are the terms? And so there's a lot of different conversations on both sides of that fence that kind of highlight, honestly, the area of expertise. And I know you and I did not talk about this beforehand, but it does make sense to have someone that knows fundamentally what they are doing from a realtor standpoint, because if you don't know what you're doing and you're trying to sell a house, that house could sit way longer than expected, and that is not a good thing. And if you're trying to buy a house, there's ways that a realtor can help you, a seasoned investor can help move that needle to the benefit of the buyer, because that's where, especially in the commercial world, that's where we all make money. We make money on the buy, not on the sell. So if you buy it right, you can get a good deal, and that's just how you capitalize on that investment. So those are the conversations that I'm having right now with the people in this room about, and this room right now will probably do $500 to $600 million in transactions this year in some form or fashion. And so it's not.
How many people you told me about? There's approximately 200 people at this event you're at.
Approximately 200 people will be in this room. You definitely have some people that are going to do bigger transactions, but you definitely, I mean, the average size transaction in this room is going to be 7 figures or higher. So it's people doing developments that are $15, $20, $30 million, $70 million raise, $100 million. I got a good friend of mine. He's doing a $300 million project. So it's those type of deals that are happening, and the ability to close quickly to finance. Half a percentage makes such a huge difference here or there, or to be able to move the needle when it comes to liquidating a project is so paramount when you start looking at that type of size, but in all reality, any size. And so it's just having the right person, knowing the right people and being in the right room can help you so much. And there are so many realtors, I know you haven't even talked about this, but there's so many realtors that have their license that don't do any transactions, they'll do one or two. You don't want that person representing you if you're doing $100 million deal, or in my opinion, even a $100,000 deal. I want the best to be in the room that's helping me make the most money at that time.
Well, so you'd mentioned, as we spoke before we went on the air, but Kent Clothier, the gentleman that is behind all of this, I guess he became a CEO at age 23. And by the time he was 30, he'd turned things into $1.8 billion in sales. And by the time he was 30, I guess he had 600 employees as well. And with that said, he also didn't have a college degree or any real formal business training. And what he's done, he's written a book, I guess he calls it on reverse wholesaling. And it's kind of interesting. Tell our listeners a little bit. This is an experience to get off track a little bit. We are talking about real estate, but what exactly is his concept of what is wholesaling? Is kind of being a middleman in there, being a realtor without being a realtor. But what is the gist of his book, Reverse Wholesaling? I'm sure you've read that.
Yeah, so reverse wholesaling is the idea that I'm going to go find the buyer and I'm going to go find the seller. And so I find the guy that wants this type of property, and then I know exactly what they want. And then I go scour the internet, I go scour MLS, I scour all the different sites to go find the person that is trying to sell that asset. And then I wholesale it back to the buyer and make the difference, the margin in between. Where typical wholesaling is I've got someone that's wanting to buy a home. Now I got to go find me a seller. And this way it's the opposite. And this way is I've got someone that's trying to sell a home, and then I'm going to go utilize them. You mentioned it earlier. All these people that their houses fell off the market, there is a reason it fell off the market. Let me go find someone that is looking for that type of house, and then let me go wholesale it to him. So it's reverse wholesaling. And he still does that today. One of his companies, they do reverse wholesaling. They go find people that are trying to sell. They couldn't sell for whatever reason. Then they go find all these buyers that might be out there, and then they put them together. And then they do just the opposite of that. They find all these buyers that are wanting properties and these sellers that might not know they're willing to sell, and then they go make that offer. That's a traditional wholesaling model. Hey, somebody comes knocking on your door and says, "Hey, Rick, I got a buyer that's going to buy your house for $100,000. I'll broker the deal." That's just typical wholesaling. He does it in both ways, but he kind of got famous and made a lot of money on the reverse wholesaling side.
Yeah, interesting. Yeah, it seems like a sharp guy, and still not a very old guy. Has done a lot.
I think Kent. I was having a cocktail with him right before we jumped on, and I think Kent is probably 55, 54, 55.
Yeah, he's got like I said, to be that age, he's got a lot of chapters of life. Yeah, a lot of chapters of life. But he's holding a mastermind there, Kent Clothier. Like I said, very interesting. And our purpose is not necessarily to promote him, but he is a very interesting guy and has a membership situation there, and has a book called Reverse Wholesaling, if anyone would be interested in it. So it's always good to hear. Of course, a guest here, Brad, owns Premier Insurance. We talk about the insurance industry, but he's also a very astute investor. So we like to talk about that's a part of what we have a large segment of our audience that is interested in real estate investment. And the second, I've done some flips in the past myself. Now I've ventured into the short-term rental business a bit. We've got one going and looking to add a second, a third, and so on. And of course, like anything else, it requires knowledge, requires research. If you think you can jump up and start an Airbnb, don't, unless you have studied it and talked with people about it and worked at it. And the number one thing is the location, just like the value of any property. It's about where it's located and where it's at. So that is, but go back quickly reviewing our numbers again. I talked about that. We had the number on the market as far as new listings. We were pretty balanced out with that. Jump to my numbers again there. In the past 7 days, I've had 685 new listings, 632 sold listings. So pretty balanced there. 561 pendings. So good numbers there. Based on those, it looks like our inventory may start to creep down a bit. But 314 expired, 63 withdrawn. So still get aligned with a good realtor that can market and whatever, where you become one of those that are sold, not one of those that are expired. All right, a big factor in all this, of course, is interest rates. Let's bring on our mortgage expert, the owner at Security Financial Mortgage, Mr. Kendall Dexter, is with us. Kendall, tell us what's happened in the mortgage industry. I understand we've gained a few basis points in the last couple of weeks.
Yeah, hey, plus 21. Not terrible. It's kind of up a little one day, down a little the next. Really just circling until we see what happens in 2 weeks. We get our Fed meeting. Expectation is a decrease. The only real question is how much. If we get a quarter, rates would actually increase a little bit off of a quarter decrease. That is definitely baked in already. So we're looking for 50, 75, 100. Something bigger that will move the needle a little bit more. I would say 50 max this time around, but I think as the next year unfolds, we will see maybe 250 basis points, and that's going to be a huge changer as to whether it's a buyer's market or a seller's market. And we've been saying for a couple of years now, maybe coming up on 3 years, it's a buyer's market, get your real estate and refi later. But it's last call, coming up on last call for that. The market's going to start to shift, and when rates are lower, demand is higher. And when demand is higher, prices are higher. So we've been saying it a long time, but now's the time. If you haven't done it already, get ahead of it. Get your real estate now, because you don't want to be involved in a seller's market.
Yeah, absolutely. Absolutely. And I've been studying things, I know which we all do, but I'm thinking you said 250. I think at least my projection I said on and speaking recently that 200 points between now and late next year, somewhere in the next year, I think we're coming down 200 basis points. Brad, any projection there of the people you're around of what they're expecting out of the interest rate market?
They're expecting the same thing. They're expecting it to fall. That's honestly why a lot of my guys are trying to buy right now. They're not trying to wait, because the minute they wait, they know, and we talked about this, that everybody's going to jump back into the market. So they're trying to buy now, and then they're going to come back and refinance when it makes sense. And so they actually, they honestly want it to stay where it's at because they're still getting good deals.
Well, yeah, the more people you have in the game, the more competitive it is, the more competition it is, the more that's going to drive prices upward when you're selling. And so, like I said, right now, whether you're commercial, whether you're residential, whatever you're buying, we're in a buyer's platform, in a buyer's market right now. I'm joined here by Mr. Brad Martin, owner of Premier Insurance and a local investor, and giving us a lot of investment knowledge tonight, and Mr. Kendall Dexter, the owner at Security Financial Mortgage. But a quick break and stay tuned, because we will be back.
Hey, Coach Mike here. I've been in real estate for over 10 years and still am on the front line. Want my show notes and other helpful resources for new real estate agents? Go to CoachMac10x.com/podcast. Thanks for tuning in. Let's get back into the show.
Good evening and welcome back to the show. I'm Rick McCormick, your host, and we're glad you're with us. I was joined in the first half of the hour. We were joined by Mr. Brad Martin. Also now in the second half of the hour, our focus is on talking a little mortgage rate. We're going to go into some of our realtor tips and fundamentals here in a bit. A new segment we added has been very, very popular. In segment 4, we've got a large contingent of real estate community listening in. And just as a reminder, our show is available on Amazon Music, on Apple Music, on Spotify, and on YouTube, on our YouTube channel. And if you go to that YouTube channel, please make sure that you hit that like button, like I said, and you can reach us and let us know any thoughts or questions or even topics of future shows. Say, man, Rick, I'd really like to dive into this. I'd really like to hear about that. 405-310-7470. Let us hear from you. And I appreciate you wherever you're listening from. I get the emails from people in Atlanta. I get thanks from people even internationally sometimes. And so appreciate all of our listeners if you're listening live tonight or on one of the various Spotify, YouTube, or listening right here through the Artist First Radio Network archive podcast. Glad that you are with us. All right, Kendall, so 2 weeks from tonight, we anticipate something. And like you said, I think the 25 basis points may kind of be buffered in. I think everybody's already accounted for that. So unless we get more than that, unless we get a 50 or a 75, I think we're going to be I think we're going to see no change. Is that what you're seeing on the mortgage side?
Yeah, absolutely. And every single time, it depends on what they say as well. So in people that are speculating in the markets are always trying to read between the lines, figure out what's coming next. And the movement in the 6 weeks between one meeting and another largely is driven by expectations, not the rate movement itself. Now, if they surprise the market with a larger than expected rate move, that will move the rates. If they stay in line with the market, you're not going to see a big difference. If they stay in line with the market, they go quarter drop, but they say bullish things about future rate decreases, then the speculatory part will come in and say, okay, I'm going to bet ahead of time on this next decrease. So that's how it goes. It's not just about what they decrease it; it's about what they say about the future.
Well, absolutely, and we see those kind of things with the stock market all the time. That doesn't seem to be quite that much this time, but in President Trump's first term, he could come out and say something and make a statement, and the stock market would improve or go the other way sometimes, based on what he said. So a lot of this things in the mortgage movement tends to be about speculation and what people are counting on or expecting to happen. So, to your point, whether they reduce them that, but if they reduced them and said, hey, it's looking like it's time to start dropping rates and come out with a very positive statement, then that would be helpful as well. So, certainly there. So, what are you seeing? I talked about a little bit about the national trend shows us this, Kendall, that much of the out of the region and out of state movement, relocation from some distance away, a lot of that takes all the time, but a lot of that takes place between Memorial Day and Labor Day. But a lot of moves that are local and regional, I mean, within where people are not relocating out of state, a lot of those people wait till things settle in. Labor Day is kind of a settling in. The kids are in school. If we have kids at home, the summer's over. We're not going to the lake every weekend. We kind of see a little bit of a surge sometimes, and I think we've seen that in our inventory numbers. Are you seeing any of your mortgage activity and mortgage applications? Have you seen that increase in the last few days or week or so?
Yeah, I have, and it seems like this is the beginning of the worm turning. Now, if you've got kids at home, a lot of times you are settled in. They don't want to move the kids in the middle of the school year, or whatever the case, but I've had a lot of people reaching out about refinances because they're onto these rates starting to come down, and the purchase market is increasing probably because they're listening to the show and they realize that you've got to buy now and refi later as opposed to buying later and paying a lot more. So definitely specifically in the last week, we've seen a lot more activity.
Well, yeah, great. That's great news. And as we see as I've said before, the real estate industry is a driving factor in the economy throughout our country, not just here, but on a nationwide basis. If we get this is projected, if things don't change, to possibly be the slowest number of home sales throughout the year, this being 2025, that we've seen in over 30 years. But we'd like to see a little shot in the arm to that and to see that thing pick up. So certainly, well, speaking of one of the lifebloods of the real estate industry are licensed realtors and brokers around the country. And of course, I'm the founder of CoachMac10x.com. You can find us their website, a lot of different things out there. That's our coaching program. And our coaching program we've addressed is our overall goal is to lower the failure rate in the industry one agent at a time. And of course, if you're listening for one of the first times, I've been Coach Mac throughout my life. I was a college and professional basketball coach for many years, trained in teaching, coaching, motivating, a master's degree in education, and some work beyond that toward a doctoral degree. So as I've been in the real estate industry, and we have had some success, and I've seen some of the pitfalls, and we've talked about in our past shows as we started this segment. In year one, 75% of realtors leave the business. 75% in their first year. Within 5 years, 90% are leaving the business. And so in our last segment, we got going, Kendall, and we call this Realtor Fundamentals and Tips. And feel free to reach out again. That text line is there on the site where you're listening. It's 405-310-7470. Text us at that, whether you're live tonight or later in the week. Let me hear from you. Or go to CoachMac10x.com and leave your comments, leave your information, and we'll set an appointment, a meeting time, and get back with you if you wanted to discuss some of this in more detail. But some of the challenges we went through, I'm going to just run through them quickly. Business and financial challenges that realtors face, and we covered this in the last show. Inconsistent income, lead generation or lack thereof, high costs of doing business, marketing, technology, MLS dues, no guaranteed paycheck. Unlike traditional jobs, there's no guaranteed salary, making financial stability a very real concern for many. Then market and industry changes, market volatility. Kendall, this last 2 years, year and a half, we've seen a lot of market volatility. We've seen some highs, and of course, we've seen some lows. High competition. The industry is saturated with agents. Makes it difficult to stand out and attract clients. Technological improvements and advancements. The real estate community must be constantly trying to adapt to new technologies, new CRMs, virtual tours, online listing platforms. Regulatory and legal compliance. The real estate industry is heavily regulated, and agents must stay on top of evolving laws and legal requirements and make certain they're in compliance and they're avoiding any issues. Then now we're down to kind of where we left off last time. Client and relationship challenges, Kendall. Those exist in any industry. You have them in the mortgage industry. Managing expectations is one. Sellers and buyers often have unrealistic and unfounded views of the market. And that's why one of the reasons where our coaching program comes in, these things that we talk about. I know, agent, I don't really understand that. I hear all those numbers and my eyes just glaze over. Well, you better encode. You better learn. Because this managing seller and buyers with unrealistic expectations requires agents to manage and communicate effectively. The best way to do that, really the only way to do that, is with effective data, Kendall. Somebody says, well, I think my house is worth this much. We've all seen that, okay? Well, what are you basing that on exactly? Where did you come up with that number? And many times you may hear, well, it's just what I think and just what I want for it. Well, unfortunately, what you need to educate your client on, well, unfortunately, that's not the way real estate works, like what you want for it. It's what the market will bear, what someone will pay for it. And let me show you what's been happening here in the last 6 months. in your neighborhood, what all has sold, what it was listed for, what it actually sold for, how long it was on the market. And at the end of the day, the talk about the appraisal opinion, this is what we think it would actually appraise for. Because that's what we can potentially sell it for. Not what you think it's worth, not what you feel like you want for it. But at the end of the day, I'm going to let you talk about where does the appraisal, and I think a lot of our listeners are going to know this, but there's some that don't. Where does the appraisal fit into this whole buying and lending and mortgage process?
Well, number one, the purchase price for the transaction for lending is the lesser of the purchase price or the appraised value. So if somebody wants to pay $300,000 for a house and it appraises for $260,000, purchase price calculation for lending is $260,000. And if you want to buy that for $300,000, you have to bring the other $40,000 yourself. Then you put your down payment based on the $60,000. So it's a huge component. Now, these appraisers are using the same data that you have access to. They have MLS. They're pulling comparable sales just like you would. But people will feel more validated by an appraisal than they will by a realtor's estimation, even though you guys are doing the same thing.
Right. So hopefully you have a relationship to where you can educate your clients. And in the event that they just do not listen, whatever, then that's step two, I would say, and you have to understand how you're going to communicate it. I would stop short of just saying, well, you're wrong. Hey, why don't we think about, because my data just doesn't show the numbers that you're trying to get to. Why don't we think about getting a state licensed appraiser? And I think your terminology is very important in this. I've had people that disagree with me, and I assure you that we're right on this. I mean, the language and the verbiage you use, a state licensed appraiser. It's just not some guy driving around in his vehicle, in his pickup truck. It is a guy that has trained and been licensed through the state of Oklahoma to do this. He's a neutral party. When you get that appraiser out, he's not working for any particular entity. And so at the end of the day, what Kendall just said, we got the home priced at $300,000, and I tell them that's too high. Somebody comes in and offers $300,000 and then appraises for $260,000. We got a problem. All they're going to lend is $260,000. And ultimately, we're going to really have to bring the price down to $260,000 or probably not sell the property. So get out in front of that on the front end. Manage expectations. What about buyers? Let's turn it around that way. Kendall, I've seen this. They want $400,000 for that house. How much do you think they'll take, Rick? Have you seen it? Well, no. We need to go and look at it and examine it and evaluate it and see how much you like it. And if that's a house for you. How much do you think they take? I said, it really doesn't matter how much they'll take unless that's the house for you. I can't negotiate on something that unless we're willing to make an offer. I can just call somebody up. Well, what do you take? We'll really take $375. Okay, I tell you $375. Well, that's good. That's good to know. You negotiate when you're ready to make an offer. And I'll dive in deep, and I'll tell you this is what's been going on, and this house is priced really well. But I don't quite see it. This house is priced a little high. $400,000. I think I could sell $385 on this. We could come at $3, but it just and so there can be. Hey, it's $400,000. You think I want to offer $350? Okay, why? How do I justify that when they ask me? It needs a lot of work. There's been a lot of showings, and if they leave it on the market, they're going to probably get $400,000. I mean, so you have to manage these expectations for the buyer or seller, and you have to be prepared to think on your feet what you're going to say, how you're going to use data, how you're going to use research, and how you'll use the appraiser or an appraisal if it comes to that. All right, moving on, dealing with stress. A lot of agents frequently work with clients in high-stress situations. Those situations can strain relationships, and they can also create challenging negotiations. So it's important in the very beginning that you establish this, that we're on the same team. We're a team working together. I'm working for you, I'm working with you, but we're together. We got to be realistic. We got to go in with an objective and take it from there. So dealing with stress. And in building a client base, establish a strong client base and a reputation. That's a hurdle for a lot of people, and especially for new agents. But establish a good client base and establish a strong and solid reputation. One of the things that has benefited us here and myself and the Written Court Realty Group is that I have been asked to write books, and I have written books on real estate. Been asked to host this radio show and be an expert in this market on real estate here, and so that has helped us to build a strong client base. But those are the things that in the market and in industry changes we talked about, and then client and relationship challenges. Manage expectations, deal with stress, and build a strong client base. Any thoughts on those?
Well, here's the thing. My opinion, as a realtor, every 4 or 5 years, you should double your book of business. Now, you got to make it through 4 or 5 years, which is why you need somebody to help you through the first 4 or 5. But every 4 or 5 years in a normal market, people get the itch to move. Plus, there's new home buyers all the time. So every 4 or 5 years, you should double your book. That requires that you do the things you're talking about, where you've got a good relationship with your people, you stay in front of these people, and you have a good reputation in the marketplace, so that when you call a realtor, they're not like, oh gosh, it's Rick. They look, you have a respect in the marketplace where when you call somebody, you're like, oh, hey, Rick, you can get things done that way.
Absolutely. Very good point. Very important on that. Our last segment we're going to go to here as we go to our last segment of the show. We've talked about business and financial challenges, market and industry changes, and then finally client and relationship challenges, what we were just discussing. The final point of my 4-pronged approach here is operational and personal challenges. Number 1, in real estate, the job requires a very non-traditional schedule. Oftentimes, working evenings, weekends, and holidays. I tell people that if you want to work from 9 a.m. to 5 p.m., you should probably choose another occupation. You have to work when other people do not. That can be a challenge for many, especially if you're a parent, if you have a young family. Non-traditional schedule, you're going to work evenings, you're going to work weekends, and you're going to work some holidays in order to meet the needs of your client. So, Kendall, I know this 75% of realtors that get out of the business in the first year, don't you feel like that this right here, I've got a couple of other things too, but this time management, I think, is a big factor in that.
Yeah, and it's huge in lending as well. If there's somebody who wants to talk about a home loan, if I stop working at 5 and I start at 9, then I'm not going to be successful. This is where these hours beyond those is where I win over a banker or whatever the case, on top of the fact that we're going to offer better rates. But same thing in real estate. The 9 to 5 worker needs to see the house at 5:30 or 6, and you got to show it. Or they need to, if it's possible, talk to them early in the morning before they go to work. A lot of people can't talk at work. So we work in a business where you have to be available to the clients, and those clients might work the 9 to 5. You don't work the 9 to 5.
Absolutely. Okay, a couple of other points under this operational and personal challenges. Time management, 1. Second is juggling multiple responsibilities. Now, I will say that I love all this. That's one of the things I love. I was a college basketball coach, and you don't realize what, I'm handling travel. I'm talking to high school coaches. I'm working on summer camp. We're working on recruiting. I'm watching videotape on the next opponent. I'm meeting with players. We're doing individual work. I'm planning practice. We're out running practice. Practice is over, getting in the car to go and watch a game, go and scout a game. It's all toward one objective. I may be speaking to a booster club event, dealing with some boosters. I did a lot of different things. In real estate, juggling multiple responsibilities. As a good, strong agent, you must act as a marketer. You must act as a salesperson. You must act as a negotiator. And yet you must act as a overall project manager for each and every transaction that you have. So juggling multiple responsibilities along with the time management that we talked about in the first one. The next one, I'm going to bring up my third, is transaction complexity. Each deal, if you're good and you're doing this, you're going to have 5 or 6 or 7 of them going at one time. But each deal involves intricate paperwork, knowing legal requirements. It involves various inspections. Friday, on a property that we have a pest and termite inspection. We have a home inspection. We have a roof inspection. And those will all go on and be scheduled in one time frame. Those home inspections might result in, say, hey, you need a foundation inspection. Hey, you need an electrician, an electrical inspection. The home inspector, I say, he's the general practice doctor. He may refer us to the specialist and some other things that may require additional inspections. That transaction is going to require deadlines. And the process is complex, and you want to make sure that you're prepared and you don't err in that. So the transaction complexity. Kendall, you're probably laughing inside because you and I together deal with some deals that we work through a lot of different situations. And we've had many people tell us that between me on the real estate side and you on the mortgage side, that we get deals closed that other people couldn't and wouldn't.
No, yeah, for sure. But with the complexity of it, the contract is concrete. So if you're not on top of things, you're on top of these inspections and your time reference date and how long you have until the end of the inspection period, and you're going to cost your client money. You're going to ruin a relationship. They could lose their earnest money at that point. Like, it's very important that you have a calendar, I think. You tell me what you think on this, but I would have all of my dates on a calendar, and I would highly encourage having an assistant. You want to get to the point where you've got enough business where you can have an assistant that stays on top of these dates because they're hugely important and very concrete in the contract.
Well, absolutely. And my assistant, Michelle, who does a great job, by the way, she puts all of this in immediately. The time reference date started on this day. The inspection period ends on this day. Once the inspection's over, we have 24 hours to get in the TRR, standing for treatment, repair, and replacement. And that may have nothing on it. May have 3 or 4 things, 5 or 6, whatever. And there's a lot of factors in there we won't get into tonight. Did you offer full price for the house? Did you get a great deal? Whatever you have to be, unless it's a brand new house. Brand new house, you can ask for every single doggone thing on there. It's got to be perfect. If it's not, then you have to be pretty reasonable. But yes, all of that goes to the complexity of the transaction. So looking at all this in totality, this area, operational and personal challenges, time management, juggling the multiple responsibilities that I spoke of, and then just transaction complexity. And if you think that you can do this on a part-time basis and you can't do it well on there. You've got to be prepared to really, unless you're going to try to do one transaction at a time. And if you want to get things going, you need to be ready to step up and get in there every day in the office. And as we do here, we start early in the morning. I'm dealing with the existing transactions I have, and then you better be generating new business at the same time. So to go about business and financial challenges, inconsistent income, lead generation, high costs of doing business, no guaranteed paycheck. Market and industry challenges, market volatility, high competition among other realtors, technological advancements and staying on top of those, and regulatory and legal compliance. Client and relationship challenges, managing expectations with your clients, dealing with stress, and building a client base. And finally, what we just spoke of, operational and personal challenges, time management, juggling multiple responsibilities, and transaction complexity. So all of those are things that we could dive into each one of them for an hour at a time. That's where the CoachMac10x.com comes in. Reach out to us and let us help you. You will increase your income a minimum of 30% if you lock in with us, and can help you get to where you want to get. Kendall, any final thoughts here? We've got to wrap it here in the next few seconds, but it's been great having you with us as always, and another great show.
Yeah, I thought that was great stuff, Coach. I think bottom line is, if you are new or struggling in the industry, you got to get some help, get that client base built, and then you're off and running, and it should double every 4 or 5 years.
Absolutely. All our listeners, thank you for being with us here on the Rick McCormick Show. We're here on Wednesday evening at 6 p.m. Central Standard Time. Until the next show, you stay safe, and may God bless.